Okay, so one of the questions that came up is, how do you decide what to trade, when to trade, all that stuff? Well, one of the things I'll do is I'll go in and just go to the forum, questions, forum. We got a new forum coming, but I type in broad market index how to set up, and search that, and you'll see a thing down here that says broad market index how to set up video New York Stock Exchange. Okay, and here's the symbol for Thinkorswim. If you like Thinkorswim, you can also go through the process on how to set up an NinjaTrader if you have an IQ feed or a Kinetic data subscription. Okay, you're going to need one of those to be able to do this, which means you got to pay like $70, or you can go get Thinkorswim for free. If you don't know where to get Thinkorswim for free, just go over here to, I want to say it's structure, and let's see if it's under other trading platforms. Thinkorswim platform. So yeah, so you just go on and you can follow the links there, but you can just go there and sign up for it. But like we have like a link in our structure set that gives you a discount on options trading if you do trade options over there and stuff like that you can use. But there's a lot of different platforms you can use. I like Thinkorswim. It's also my backup platform if Ninja ever like has a heart attack, right? Then I'm able to at least pull something up and have a chart right away. So I always have it open. But anyways, let's go ahead and look at the broad market index. So I'm just going to copy this symbol from Thinkorswim, or you can set it up via IQ feed. I have both set up, but we'll just do TOS. It's free, so I want to teach you the free. Put that symbol in there, that advanced decline symbol. Okay. This is the total of all the shares on the New York Stock Exchange. How many are up for the day versus how many are down for the day? Okay. So how many are up for the day versus how many are down for the day? Pretty simple, right? So if there, I don't know, there's like 18,000 stocks or something. So if, more up than down, then that number will vary. And when the market opens up, it may be below a, zero number there, okay? Because you may have more shares down just on the open, like from a gap. Okay? So what does this tell me? Well, if you look at that, this is not just the 30 stocks in the Dow. It's not just the 100 stocks in the NASDAQ. It's not just the 500 stocks, in the S&P. Okay, now obviously it's the New York Stock Exchange, so it's really not technically any of them, but the whole point is like this is the broadest, smoothest market index out there. So if I'm looking at it, I really would like to see it ideally, trending. And if it's not trending, if it's just flat, okay, if it's just range bound, so I'm looking at it, the market opens up. So this opens up and the market opens up. This is Central Time on here. Okay, so market opens up. It's down. Okay, so either I want it to keep going down or I want it to, go up. It gives you a really great, sort of like looking at all the indices at one time. Okay? So go back here. I mean, this one, like right out of the gate. Watch what happens. Okay, here's Monday. All right, Monday was a good trading day, right? So Monday. So a little bit of chop right there in the morning. But we would at least get some movement, and then it kept trending, especially in the afternoon. Go, 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 go. Okay? But not too bad. At least it was moving in a trend. We had a little pullback, and then it kept going. What if we go on to Tuesday? What do we see? So I'm just trying to get on this arrow exactly so I can just tick, tick, tick. I'll try to do this. Just hope I don't go too fast. All right, so Tuesday. Boom. Big, big bar right there. Okay? So it flies up. A whole bunch of shares are positive. Then they drop off. Now we got nice trend. Trend back up. Then it sort of goes chop on you, right? Not much happening right there. End of the day. Go to Wednesday. Opens up, way up, just like sort of we had before. Except for not quite as big of a range there on that first, 5 minutes. I'm looking at 5 minutes, by the way. Look at it. Down. Keeps hitting that stinking level. Back up. I mean, by now, can you see the... I mean, you got to be able to see the chart pretty easy. But, I mean, down, up, right back down, bouncing right off of it. Back up. Back up. Not breaking out of nothing. We got a breakout. Maybe we got a trade. Hmm. No, probably a little chop right there. Got a little run on that one. So it takes a little practice, but you can see, I mean, there was definitely a difference between that day and even that day. Like, hey, a little bit, but you know, we got at least some trends. We got a few bars going in the same direction, and then it took off. Go back to that, you know. I mean, we can keep going back and back and back, but do you see? It's one of those things. I'm trying to help you see it as easily as possible. But I mean, like, is it like making lower lows? You know, trend, lower lows, higher highs. Like, do you see that happening? It's like, well, no, really, it's not making anything. It's like, well, it made a lower low. Oh, we got a higher high. Oh, now we got some higher highs. Now we're trending. Boom, end of the day right here. So about we actually made higher highs, like starting right over here at like 12:30 on Nasdaq. So market's going up. First time we got a real, breakout of a trend was at 12:30 today. We did not have any lower lows or higher highs, sequential lows or higher highs happening. And there's one lower low. Boom. Finally it breaks. Boom, breaks again. Okay, now we actually have a trend. And we're up. We're still up right now on Nasdaq. It's not huge, but it is. You know, positive at least. So, I don't know. Is this helping? Just sort of trying to help you see like what BMI is and how it works. Trying to look for a trend on the broad market. This is if you're trading, obviously, if you're trading indices. But if you're trading S&P, Russell, Dow, Nasdaq, I mean, this sort of helps you see when, like, is it just me or is it chop? Oh no, it's chop. There's nothing happening. Okay, over here, there's chop. Nothing happening. Again, you can get this for free. If you want live data, you sign up for a live Thinkorswim account. You don't fund it. You log into your demo account, and I mean, fund it whenever you're ready, whatever. But then log into your demo. If you sign up for a live account, and I believe this still works. I mean, obviously this is a live account. If you sign up for a live account and you log into your demo will actually have live data. So boom, that's going up. Then turns around. I mean, we're trending. Okay. I mean, it may be a big old bar. Go from negative 400 to positive 500. Okay. And I don't want you to get too overly style oriented, but you know there is some good. If you can keep it simple, man, it's so big about that. If you can keep it simple, um, that way you don't, because what you don't want is to be like second guessing everything under the sun. So style is important. Style is helpful. You know, like reading the news, knowing it's coming up. Uh, news is great. You can get some great trends. But if you just see the market going wobbly and the BMI is flat, the news happened. I mean, you may wait and sit back a little bit. Okay, but I mean, I'm probably gonna start out of the gate because there are plenty of days where out of the gate is freaking awesome. Okay, um, but I am gonna be cautious. I'm gonna watch. I mean, yeah, like this day out of the gate sucked. Okay, yesterday sucked. All right, this day awesome. Okay, right out of the gate. So don't be real careful not to let like 1 or 2 days of choppiness filter your world. Okay, and make you start changing your plan. Now this day, man, popped up, then boom, turned right back and down, went down. Popped down, popped up, then did a nice little smooth trend down. This one, boom, up, and then down, and then moving on back up. Okay? Right there, boom, boom, boom. Then a little chop in the middle of the day, got another couple trends, and then, nothing. But I mean, out of like you can see, there's plenty. I mean, right there, that one, popped up, sort of stayed for a little bit, but then, I mean, by the end of the day, paid off. Right there, out of the gate, paid off. Right there, out of the gate, paid off. Okay, so I know if you have a losing day, it's really hard to, like you want to change the system. Like something must be broken. Well, no, you expect losing days. Let's go back and look at the majority of days. So, and so what I do is, I mean, I start out, but if crap's not moving, that's why I'm watching a few instruments. But I mean, like that right there, I mean, that's significantly different than the days we just looked at, right? I mean, here's our low. Here's our high, right there. I mean, we basically we didn't close below it. We didn't have broken out of the range on a close yet. We didn't even do that till 12:30. Okay, so that's gonna, I'm gonna hop in on that first trade. I'm gonna be in, and the first trade on Nasdaq was profitable. It was a good trade. After that, it sort of sucked until the middle of the day. We got a couple others, and on down the list. Um, one of the things, and I'm probably going to stop here in a minute, or else I'm just going to be repeating. But I bet a lot of you came in at 9:30. It's just my guess. Okay, you came in right here. And you missed that trade. Okay, could this be any of you, right? You missed that trade. She started at 9:30. I'm not saying it's bad to start at 9:30. Okay. I don't ever start before 9 on oil, but so 9:30 here. You missed that one. It goes short. You're waiting. Boom, it goes long. And what'd you do? I bet you got in like right here. We're already in a long. Remember the training? I'm like, if you want to do that, you can, but you're really exponentially adding your risk in. We're from here to here. You bought when we're like that much up at that point. Like that's a pretty big. That's like 8 points. You bought 8 points higher than the original entry that you should be trailing with your stop, like right here, right? That trend catcher line. Instead, you're adding in at a higher price. So, I don't like to go in and add on to a second trade. I'll just either you got it or you didn't. Now, one thing I will do, sometimes, I come in here, boom, let's say I missed it, and the market does pull back, which it did, right there. I could buy right there. Okay. One cool thing about buying, like right here, like because this was my original entry. This is sort of some advanced stuff for you, but just an original entry. That's my original entry. One tick above the high of the bar that flipped, boom, right there. Okay. If I end up getting in right here, and this bar is already closed down on me, the chance that this chop filter will close pretty quick and flip is good, if it does go against me. So I have a nice tight stop in this case, because I've already had a bar closed down on me. But so that would be like if I was gonna do second entry, I'd want to do it at the same price. Okay. I wouldn't want to do a second entry on like the next trend catcher flip, entry, tick above, break, enter type thing. Yep. Well, one of the worst scenarios people get into is they have a losing day and they just walk away. And then right after that, like you said, it takes off. And so they keep getting in. It's like getting into every bad trade and not getting into good ones. Like it's just like this vicious, painful cycle. And what you're doing is you're going, I got a bad day of chop. I'm going to take off. And it's like, well, does that really work? I mean, or often do you see a bad day of chop? I mean, this day sort of went up, went down. Wasn't too bad. Yeah, that one didn't really chop on you. That was just sort of a smooth, flat, not a whole lot going on. But you're going to see big breakout days happen after. I mean, there's a choppy day. There's another good example of a chop day. Okay? And then, boom, down, up, short, all the way. Day after the choppy day. So, proper risk management is huge because it's going to jack your head up for getting back in the next day, the next trade, etc. It's going to make you stop trading before you get to your actual proper 5% divided by 6 drawdown, and then you're going to watch the market just take off afterwards. We've all seen that. Like, you stop like at 10:30 or 11, and then all of a sudden 11:30, the market just jets. I mean, here would be a good example. Let's say you got chopped over here just all the wrong directions, okay? And then, bam, it flew down. Made back most, if not all, the losses for the day. Potentially profitable. But you stopped because you're annoyed, da-da-da-da-da. So, again, that 5% of 5% divided by 6. So that helps out a lot. Looking at BMI helps a lot. I'm not waiting for trends. I'm hopping in. But if I see it chopping, then I'll back off until I actually see it, like maybe making a close above that high or that low. Like give me something. Like there's no close above the high or the low for the entire day. So if I took the first trade, awesome. Like I said, that one actually did work if you got in on the first entry. But then after that, it never broke a higher low. So this is obviously style. This is teaching you just an advanced step in how to read that. Does that help you, John? So I'm saying, like, I'm not. What I'm saying is, if I see it chopping, I'll back off of that market. There were plenty of good markets today. I've been there, man. I know it can be tough. So, and I mean, these aren't like there's system, which is your rules, and there's style, which is your sense. And your sense has to be objective and visual. You don't just want it to be how you feel. It can't be your sense can't be about your profit because you'll always take it off too soon when it's winning, right? You'll always take it off too early when it's losing, and then all of a sudden it goes right back in your direction. So system is your. This is when I enter. This is when I exit. This is when I try my stop. Style is there's news, so I need to use some common sense. There's obviously I can see chop. It's not making any higher highs or lower lows. I mean that'd be a simple way to define it, right? So and using advanced decline, BMI here. That's another like really objective, further out looking. I mean, there is ones on Nasdaq and S&P and Russell. I found the big one, the broad market index, is the best one. So the other one just too much mirrors the market you're trading, and so it doesn't really help you. So this right here is a nice way to smooth things out on looking for chop. Let's see here. All right, well, that's how you use broad market index. That's one way I look at what I'm looking at in the market. You can look overnight, like at, say, the DAX, the FTSE. DAX is usually a nice thing to look at. If I see, things moving, currencies moving. I mean, I like DX. I like currencies. I'll look at those. I'll check out metals like gold. Gold is my preferred metal out of the golds. Now, copper I love, but copper's crazy. But I actually like it. It's it's a thrill ride. Let's just put it that way. Um, and then silver, not my favorite. Some people love it, you know. But and it looks small, but it ain't as small as it looks. So just a little bit of movement is a lot. But I mean, you can look at the metals, you can look at the indices, you know, all that. I mean, zoom in, see what's going on, see if things are moving. Look at your deviation levels, stuff like that. If you see it bounce between point 0.5, point 0.5, point 0.5, point 0.5, you might be like, you know what, this thing obviously is range bound. I may need to think about what I'm doing. But I mean, the biggest thing I want to challenge you is to look back and see, are you trying to change your system just because, okay? Just because of how 1 or 2 days went, or because you're exiting early due to not using proper risk management. So you're not following the system, you're following your count size, which I get that, but maybe it's time for you to downgrade the instrument or accept the additional risk. One of the two. So do a lower tick instrument or accept the additional risk and trade it properly. And go back and do the last month. See how it did. See where your drawdowns happened. Okay? All right. Hopefully that's a couple helpful tips there.